Perfect. I want to show y'all something. So if you look in the Telegram, you can see the different strikes selected. So I posted it so y'all can see the prices. I happen to have the 40/40 calls off of open. So 40/40, obviously, it's going to be up here. It's about right here. Now 40/40 even. These calls from a low to high, 0.05, 7.0. We also have calls that hit higher numbers. We have calls that also, like the 40/25s, that were in the money. That actually went from 0.05 to 12. I'm sorry, 0.05 to 16, 16.50. I need y'all to understand the return on that. So let me do that real quick. That's got to be, yeah. So anything over, that's like over, I think a 200x. It's over a 200x. No, mute your mics. That's about a 300x return on high. It's like a 30,000% return. It's that's the same. Like I said, I was able to get mine for 30 cents. 30 cents. It's gonna be very hard to fill at 5 off the very open. But to be honest, a lot of these calls, when we look at the day, go here. Here. I guarantee you the majority of these calls started at about 25 cents, because mine, when I filled, they were 30 cents. And I didn't even have the cleanest entry off open because I had other stuff going off. Let me actually see what time I filled. Give me just a second. I just want y'all, give y'all little edges, of course, every day. So these, I bought 20 minutes into the open. I'm actually mad because some of them I ended up selling by accident. But these, like I said, I bought them for 35 and 30 cents. That's 20 minutes in. That's not till literally, yeah, this candle. It was at 52. These were technically 35 and they went over $4 a contract. It's like 420 a contract. because people are always like, oh, I can't play SPH, I can't, have a small account. You can. It's just you need to know when. So this day I was looking at last night. Obviously, we had a very strong chance of trending. We still had this high target that we didn't finish off. So this is another setup you can add to your book. When you see a low that got ran and you see a high and you see the session doesn't complete the high, you know it's likely to continue because we still got to take out this high, this liquidity. So with that, I had already started my day, obviously aiming for these previous day highs. So off of open, even before open, I knew that these were my targets that I expected price to get to. So understanding that, what you can technically do is take a very low risk gamble where if you're buying contracts down here, because right here, we know from here to here, this is going to happen. We know off of open, once we start breaking certain levels, those important levels I tell you about, like when I talk about, the New York high and things like that, we know very certainly, like this was the New York kill zone expansion. Once we broke London, this is London, there was a key level right here, this FF, this fair value gap fill. We filled out this fair value gap. So remember, those fair value gaps are the imbalance that the market draws to. So remember, this was a giant hole. Remember, I had it marked as like a city. That's what this was. Once we fill it out, though, this void, as they call it, is gone. There's now price. Since there's price volume here, new price is going to be supported by old price. There's no imbalance. So that gave me my bias that we were very likely to push up because since we have new price supported, they need to push price up before they can sell it. Does that make sense? Perfect. They need to push price up. So think about it. If they started their position here, what happens every time after this consolidation and this aggressive move, it has to be matched with another consolidation because that consolidation is them divvying out the profits. If they're pushing up, we're distributing out the profits. Distributing out the profits. Become the low, they need to accumulate. See how like that has to happen? Balance to imbalance. If you look on my reels, one of them with the matrix, I talk about that. Price always is going to have to expand either way and consolidate. Go back, study the charts. You're going to see the same thing happen over and over and over again. It's very rare you see price just expand, and reverse. It's going to expand, some type of consolidation before reversing. See that? Everywhere. Press a move. There's always going to be some type of consolidated move. So start using things like that as a narrative to build your thesis for price. This old line was actually the POC. So here's another tool you can add to your toolbox. This is called the point of control. What it does, it shows you the most volume, where the most contracts are traded at per session, and it's based off of time and sales. So it's showing you high volume areas. So since we were sitting here in this point of control, think about it. What is point of control? High volume. What does volume do? It supports price. That gave me the bias. If we've already came and dipped down here and there's a lot of volume, think about it. What happened up here? They sold, right? But there's a lot of volume here. If they sold here and there's a lot of volume, what logically is happening here? They have to be buying because if they were selling, we would drop. So this should already give you a sign. We're aggressively sold, run into a high volume area, and we're supporting price. This is letting you know they're accumulating, especially when you see these long wicks. See how these wicks, well, this is another key sign. Key. Market gives us key signs. This means price is getting sold off and bought up aggressively. These are large pocket buyers, composite man, strong hand, whatever you want to call them. But look, I'm always looking at this because this is going to give me clues as to where heavy buyers are. So this is how I traded Riot Mirror. I charted Bitcoin and I looked for these strong wicks because retail cannot do this. You, I, and half the country could start buying ES tomorrow. We won't do anything. We don't have enough value. We don't have enough money to do anything, but these institutions do. They have trillions upon trillions, and that's what you're seeing here. So if I see them buying here, I see us in discount. See how very logical it is? We're going to go up. Now, the second thing that really helped you guys, when you see these gaps, these fair value gaps getting created, there's supposed to be a retracement. I noticed off this one, we never traded back into it. Whenever you see a fair value gap like that, these are called breakaway gaps. If they don't get traded into, understand that means we have a very strong trend to follow. Oops. So my original target was the order block. Once I saw us break above it, I just kept holding my position. We ended up hitting all of these highs and touching the previous day high. Once we came to here, it was lunch, and that's what I talk about the timing window. So price went sideways. That's when I said let's cut everything because we don't want to give anything back. Focus on taking your best trade. That's one thing I've looked back over the years and time. Like, if I only traded my first 1 to 2 trades, I think I would have like very few losing days in years because it's almost always my first or second trade is a winner. So I'm understanding that my best trade is in the morning off open, and I have a setup that's highly probable. You see how I just stacked the odds? And I have, look at this, I have a long range. I knew once we started passing this level, regardless, we were going up here. I didn't know how far, but I knew we were going to at least hit this order block. It would be very unlikely we didn't because there was nothing in the way here. You understand that that's when you want to take advantage and put on as much size as you can within reason, because this is a layup high probability trade. And that is why off of here, I started buying those calls. So I think you guys can start doing on these highly probable days when you have these targets that you know we need to come into. Like looking back, what I could have did better, I knew we needed to come into this previous day high. Which was, 4013. And I ended up, like I said, I had 4040 or 4050. What I could have did was have found some calls that were slightly cheaper. I mean, not slightly more expensive, but that ended up being where I was in the money a little bit quicker, because then I could have set through more drawdown because I would have had the intrinsic value. But the 4040s were still good because luckily we tapped. So that got me in the money for a quick second to sell. In the money and there in the money to sell. What you guys could be doing, like I said, on those days is whatever position sizing you're using, you can take a small portion, like, hey, I'm going to buy a few of these 35s because my win here, if I put enough size, if I'm going in with 200-300, I'm hitting, 100%. I can afford to gamble, 2 calls for 70 because I made 200. So even if these, burn to nothing, I'm still up 130. But these have the potential to turn into, crazy amounts. Or like, imagine if you had got 70, but you got that fill. So you got 10, you ever get 10 of these? Think about that. You ever get 10 of these 5-cent fills? Like if you had bought that very, very open, you could have literally turned $17 into $16,000. Who likes that? I like that. Let me get a one if y'all like that. Definitely. Yeah, exactly. So just understand on these highly probable days, is why I'm always watching the SPY. You can really come back. You can drop your port to $100 and come back almost any day. The swings are there. So just really focus more than anything on being patient and looking for these range expansion days. We're moving 50 plus points, and you can get in as low as possible. You can, on these days, very easily turn 100 to 1,000, very easily 1,000 to 10, and 10 to 100. That's the next goal. So I just wanted y'all to see that, to understand how possible it really is when you're taking advantage. On top of that, if you guys had a futures account, you could have just got in bottom. I didn't play futures today. It was just an options day. But this expansion move here to here, it's like 60 points. So even if you aimed for the low, that's 40 points, 2 minis. That's $4,000 for just 2 minis. And you can get 2 minis for about $1,000. So yeah, easy, very easy compound. Very easy compounding you can do with futures. I'm sorry, my math is all off. If you had 40 points, I'm sorry. No, that's right. About I think it's 4,000, 40. Yeah, $4,000. Shit, you could even do one SPX contract. I mean, not SPX, ES. That still would have been $2,000. So you could build your account very fast with futures. One of the persons in the cult, she turned 50 to like 3K or something, like a week or two trading futures, because you can just keep trading, keep trading, keep trading. So just understand, like, each asset has its benefits to growing your account quickly. You can get options on trend days. You get them for very, very cheap. Very cheap. Yep. Very cheap down here when you expect those 150, 52. If you can just get the 50 to 100 point days, anything over 50 point, you can find SPX contracts that are going to go from like less than $20 to hundreds of dollars. Any day. Look, this day was only 50 points. This ain't really a crazy day. But we've been so precise with our entries. Most people who are waiting on indicators aren't entering until somewhere here and they're getting out. We're getting the full moves. So as we get these full moves and we're buying these cheaper out the money contracts and building our accounts, padding them with these, as your accounts get bigger and bigger, you're going to be able to afford to where here you're buying all your contracts, for 1,500, 2,000, whatever. And this first move, you're already up, 200%. So you're up, you buy a few contracts, you're up 8, 9, 10 grand, but you still have these runners down here you bought, but you bought a gang of them, for $30 or so. And you could initially buy, if you're up here, 10 grand, you just spent, like 1,000 of these out the money calls, these $30 ones. Up here, once you close out this position, you've paid for this $1,000 gamble. But this $1,000 gamble can make you even more than this if you bought, a bunch of 30-cent contracts that turn, 2,000%. You could turn like 1,000 into like, what is that? 20 grand. So Just something to think about as you guys are growing your accounts. Any questions? Questions? Anybody? Questions, concerns? Yep, it is. Just want y'all to be on top of it. So we got tomorrow we got news. Playing it cautiously. We're taking out all these highs, and it's likely, I don't know which way they're gonna take us, but they can take us way up here, or they can drop us way down here, or even worse. So that's tomorrow. So I want to play it very cautiously. Really focusing on not giving back anything to the market. They can't get nothing. All right, y'all. I'm out. I just wanted to give y'all a quick little meeting, have something to think about. Yep. Good job. I saw y'all. A lot of y'all was winning today.